Hi guys, Tunes here. I figured I would try to give a little technical analysis tutorial by using the DOGE chart for um, all you new guys that are just getting into crypto for the first time. Maybe you're wanting to understand a little bit how to look at a chart for maybe trying to trade DOGE a little bit, or maybe you want to learn to chart in case you want to look at other coins in the future. Um, but yeah, I figured that I would go through the Doge chart with you guys, tell you what I'm seeing, and maybe we can learn something together. Um, so just for starters, the application I'm using is a TradingView. They have a super nice, clean app you can download to your desktop, or you can just use it on your web browser. Just go to tradingview.com. Not sponsored by them or anything. That's just kind of the standard for charting, in my opinion. It's a really great product, offers a lot, and it can be very simple. So yeah, what we're looking at here is this is a daily chart. So what that means is that each one of these, they're called candlesticks, represent a day of price action. So the gray candlesticks, the dark gray, represent price going up, and then the white, like light gray white candlesticks represent price going down. The blocks are called candle bodies, and then the lines are called candle wicks. So if we just look at this big candle here, if it's dark gray, that means price went up. So the bottom of the candle stick, or the candle body. The bottom of the candle body is where price started out that day, and then the top of the candle body is where price ended that day. And then the wick is any price action that occurred that was kind of outside of that, where price started and where price ended on that day. So candle bodies, candle wicks, if they're dark gray, it's going up. If they're light gray, it's going down. Pretty much that simple. Okay, now, you know, rewind a little bit to like January 26th, January 27th. Doge is trading at 7 or 8 tenths of a cent. And then now where we are is we're at, 63 cents about. So just off the top of my head, that's like 80x, I think, depending on where you bought about. I mean, if you, I'm going to say most of us didn't buy here, but yeah, about 80x from January 26th to May 5th. So about, I don't know, 130, 140 days and going up 80x. That's pretty much what crypto is all about when you have what's called alt season, which is kind of what's going on right now, especially with Doge. Um, just like a fair reminder is that this kind of price action, price going up like 80 times, 80x in like 4 months is it's not like normal. It's why people love crypto, because this type of thing can happen. But you kind of got to understand that where we are is generally more towards like the top than so the bottom. We're seeing like these like TikToks of being like, oh, Doge going to $3,000. Like that's literally insane. And like entering in this trading community and entering in the Doge community with like crazy price targets like that is how you can end up being left holding the bag forever, and then before you know it, you've like lost all your money and you wonder where the past year of your life went. That happened to a lot of people in 2017, 2018. So we really don't want to put ourselves in that position. For me personally, I don't want to like give out like a price target. Obviously not trying to give like financial advice here. I mean, if I had to guess, I'm gonna say like we do go to a dollar and then maybe a few dollars. But I'm gonna say I don't. If you think we're going like $100, or even really like, even if you think we're going to like like $50 or like $20, to me at least, I think that's a little kind of like crazy wild. doesn't mean like you totally missed out. It just kind of means that like you just got to understand we're up like 80x in like 140 150 days. So keep that in mind. Markets tend to attract new market participants at the top because when things just keep going up, it comes across as being an easier and easier and easier game. And so if you think about it, as a bubble happens, the closer you get to the top of the parabola, the more people it's going to draw in. The more stories there are going to be of people making tons of money. The more, friends are going to be talking to friends saying, "Hey, like I got this. It's so easy, so simple. Like you're missing out." The more FOMO there's going to be. So it's really important to kind of try to disassociate yourself from the hype and just kind of understand where we are. So okay, up like 80x in like 140 days, whatever. Now, for technical analysis is basically just trying to look at a chart and find points or levels on the chart where you think there may be a special level of like supply and demand, or maybe there's like liquidity or whatever, just a level that you think that if the chart hits it, like there's going to be a reaction. Now you can go as far as you want with learning technical analysis. You can study it for like years, and you can you can like try to do all these different strategies using like moving averages, using indicators, using volume. Like you can use tons of different things, and it's pretty much just a never-ending pursuit of perfection. But what I would say, my advice to you if you're like new to trading, is that you really don't need a really sophisticated level of technical analysis to be successful in trading. You can pretty much trade off of just lines. And if you're navigating crypto, you're probably like following new accounts, and you're seeing maybe some like sophisticated analysis. And a lot of the times, that's just kind of a strategy or a trick used to try to convince you to like pay them to like teach you how to trade. Are there some good services available? Yes, but the vast majority of them, no. I would say that you can teach yourself how to trade by just using lines. So in terms of lines, we're just going to talk about two types of lines. We're going to talk about horizontal lines, and then we're going to talk about diagonal lines. So let's start with horizontal lines. So here, looking at Doge, let's just kind of focus in on, April and, now just May beginning. So as we said before, we have candle bodies and we have candle wicks. So what I would say is that you might think to yourself, okay, like there's candle bodies, candle wicks. If we're going to be drawing horizontal lines, like what do we want to focus on more? Do we want to look at the wicks, or do we want to look at the bodies? And what I would say is that there's no perfect science to it. There is no this one way is right over the other. I will just say that I like to use candle bodies. So when you're drawing horizontal lines, what you're basically just doing, as we said before, you're looking at areas where you think, price will have a reaction. So here, as we see in, early mid-April, when price went from, 4 cents up to 40 cents, 10x, unbelievable. Kind of topping out on 420 there. Nice. What we're going to see is that this candle close is going to be our resistance. So if we kind of just like separate these two moves, like this move and then it pulls back and then this move, what we're kind of just looking at is like, okay, price went up and then it stopped and then it pulled back and then now price going up again. So it's like they're kind of like different moves, different waves. And just by kind of like looking at a chart, like very simply, like if we taught this to like kids in like second grade, they literally could understand this. Like it's just you use like the way that the chart kind of like goes up and then like you can see it like pull back and then go up again. You use that to draw your support and resistance. So for me, as seeing like this one move up kind of stopped here, this was the highest daily close. This is where I'm going to put my level. And then, so the thing about horizontal levels is, they're support and they are resistance, which basically means that right now, or, in the past, this level had been resistance. And then we broke through it. And then, the hypothesis we can, create is that if price were ever to come back down here, that this resistance would now flip into support. So what was previously, like supply would now turn into demand. That right there is like the most, fundamental basis of technical analysis. It's just like supply, demand, support, resistance. So yeah, then what I like to do is I like to kind of, I like to look at like details. So we start with the daily chart, okay, and then I have a few different time frames I like to look at. I like the daily and I like the 4 hour. So start with the daily. We have our resistance here, which if we came back, it would be support. And then now let's go to our 4 hour. Okay, so let's bring our name over here just to make it clean, look nice. Okay, so now this is for me kind of the main level here, kind of this like 40-cent level. And what we can actually do is we can kind of, by using the candles, the candlesticks on the lower time frame, is we can replace this, daily level with almost like a box. So that's kind of the way that I like to visualize my charts. So maybe just kind of like that. So you can kind of see like, price, runs up, hits resistance, pulls back, runs up again, hits resistance, pulls back, and then, runs up, hits resistance here, then breaks through, and then now you see this big move up. So, this is pretty much the main level on this chart that I think, we just want to focus on. Just this one level. Now, we have price hanging out up here, and we actually have a catalyst. So the catalyst is, I think it's May 8th, is Elon Musk is going to be on, Saturday Night Live. And who knows what's going to happen. Now, important thing to understand about markets is that, there's this idea of like fair value, and like, traditionally the stock market, you can look at, you can look like a balance sheet, you can like financial statements, you can look at like all this stuff, and, we're kind of like told like, okay, if you look enough at, like a traditional like company business that's like listed on the stock exchange, if like look at their financials, that you can like find like a fair value for that company, and then the price of, that stock is going to reflect that. The difference in crypto is that it's pretty much like just pure speculation, which makes it a much more raw market. There is no like way to fundamentally value Doge. It's really just worth whatever it's worth at the time. Like right now, it's just worth 62 cents because that's what every single person in the world that has participated in this market has agreed upon. So, with like events, right, and like catalysts, something that tends to happen is basically there's this idea of like sell the news. So like we were saying, traditional markets, like, we're kind of like told like, okay, there's a fair value, but then in crypto markets, so much more raw and it's just all speculation, emotion. when markets are just like very raw and just pure like speculation, it's basically just uh, people thinking about the future, right? So anyone that like buys Doge right now at 62 cents is buying it because they think in the future it's going to be worth more. And then anyone that is selling Doge at 62 cents is thinking in the future it's going to be worth less. So what happens when you have these like events, right? Like catalysts, news events, whatever, like May 8th, Elon Musk on Saturday Night Live. It's like everyone is thinking about Saturday Night Live, and everyone is thinking about that in the future. But when Saturday Night Live happens, and then Elon Musk goes on and makes his jokes about Doge and whatever, after that happens, there's not really going to be that same like excitement about the future. So it's like you just going into the event, people are always thinking about the future and are excited for the future. And then once the event happens, there's no more future to look forward to. And that's not to say that Doge, like after Saturday Night Live, is going to go to zero. I'm not saying that at all, and I don't think that will happen. I'm just saying that in the short term, a lot of people that are speculating on Doge, that are trading it, whatever, are thinking about the future. And then when this thing that they're thinking about happens, now all these people that are thinking about the future now don't have as much to look forward to. And so then people will actually, then sell. So this basically just the concept of sell the news. So that's why it's important to mark this out as catalyst, to basically watch out for like, okay, we don't want to necessarily get trapped in like this, like all these people that bought because of Saturday Night Live then sell once it's over. Like sometimes you can kind of like front run it maybe, or not, or maybe you don't want to speculate on it at all. I'm just using this as an example of this type of thing, like a catalyst, whatever happens all the time in all different coins, all markets. And it's just a good concept to hear about, I think, before you actually experience one. So yeah. So for me, what do we have? We have our support resistance level, and then we have our catalyst. Now, I would say that I just personally feel that price is going to retest this level at some point. I know a lot of people are thinking about $1, and cool. I like we'll get there at some point. I don't know. I like personally, I think so, but like who knows? No one can see the future. And so what I want to do now is that since we've kind of used this level to serve as like what's important about the chart from right here is where May 3rd is, and before, now I think we just kind of want to focus on all the price action that's happened after it. So maybe what we can do now is go down to an even lower time frame and kind of look at what's going on up here. So what I think is I kind of want to go to the hourly time frame and just kind of investigate what's going on here. So here we are. We have Doge. This is the hourly, and what we're looking at now is this is like each of these candles represents an hour, and this is from you can see the days down here of May. So this is from about the 5th and the 4th. So just the past 2 days. Now again, I think we just want to look at kind of support resistance, and so what I'm seeing up here is we're going to have a resistance up here, and then maybe we'll have kind of a support here. As you can see, like price kind of came up here, ran into resistance, bounced up, hit resistance up here, and then pulled back into it, flipping this resistance into support. And then now here we are, price is kind of hanging out in the middle. And so then What do we do? What do we see from this? I think the recording's going to end, but we're going to. Hey guys, got cut off there for a second because TradingView only allows for so much recording at once. But yeah, so this is kind of what I'm looking at. Like down here, our gray box, that's our like, zoom out. We kind of on the daily, like we started with a resistance level that was just a line here. And then we went to our 4 hour and kind of, retrofit it a little bit to just kind of make things clean. And then now we're just focusing up here. We're on the hourly. And so we're just, again, we're just going to keep things very simple and look at basically support resistance. So up top here, we have resistance. And then down here, we kind of have support. Again, when we're drawing these support and resistance levels, what we're kind of trying to do is like view the market in like waves almost. So, like this was kind of like a wave up, and then price like just kind of consolidated below. And then it had another wave up. And so that, it's really just like a visual thing. And it's subjective, and a lot of this stuff really can come down to like drawing patterns, and a lot of stuff can boil down to whether or not you have good pattern recognition or not, and you can kind of notice things that you've seen before and how they played out, etc. But yeah, my own subjective way that I would, draw support resistance on this is by using these hourly candles and these, horizontal levels, support resistance. So what I'm looking at is prices up here. This is our, major support level. And then this is our, these are our hourly support resistance levels. What I'm looking at is, what tends to happen a lot in the crypto markets is, players, like traders kind of, we're kind of at war with each other. When we're all in, you've joined like Doge, the community, Doge Army. It's like, you're kind of like, okay, we're on the same side here. But, every time that you buy, like someone is selling to you, it's an efficient market. It's a zero sum game. And it's kind of like you're at war with like the other market participants, and everyone is participating in the same market. So in essence, you're actually, you're always, trading against the quote unquote best traders in the world. And then you're also trading against the like the largest traders in the market. So you're trading against billionaires, whether or not you really realize it. Billionaires who are like trading like multi-million-dollar positions. And something that like us, we don't have to really worry about too much is this thing called like liquidity. And what liquidity is it's basically just like, your ability to buy as much as you want of something at a certain price. So like I said, whenever you're buying, someone else is selling. So you're buying from someone else in the market. If Elon Musk wanted to buy $1 billion of Dogecoin right now, if he just like market bought, like just like pressed buy $1 billion, like the price would like jump up probably maybe 10, 20 cents. Maybe less. I don't really know exactly, but it's just, the point is that it's different than like, if someone buys like a few $100s, even a few $1,000s, like that's the idea of liquidity. And so big players, liquidity isn't always available to them. And so, you got to think that if, you have these like aspirations, and you're like, okay, I'm going to become the biggest, best trader in the world. You got to imagine that this idea of like exit liquidity is actually pretty important. And so, you may think like, okay, I want to buy Doge at like 50 cents and sell it at 75 cents. And then, but you have to think like, when priced at 75 cents, are you going to be able to exit your position? And so, in my opinion, at least, I would say that like markets, by nature are like manipulated by like these big players. And, you know, when you get into trading, like if you really get some experience under your belt, you're gonna like kind of start thinking it too, and like you might start be like, oh my god, like this is a rigged game, like they're trading against me, blah blah. And like my answer to that would be that like these big whales, these big players, like they're not like trying to like single you out. Like, if you're like a few hundred, few $1,000s, like they don't really like care about you. Like they're not like going after you. They're really just concerned about other huge players. And part of their strategy in terms of like, when they're concerned about liquidity is, you know, they will push the chart around and they will manipulate it and they will paint things, and they will basically create scenarios where if they can make a certain thing happen, they will get their exit liquidity or their entry liquidity or whatever. So for me, like if I'm looking at like liquidity right now and I'm thinking like, if I'm a big player, right, and like I want entry liquidity, I'm personally looking at kind of like down here, because what I would say is that um, if I'm like a day trader and I'm trading this, I'm kind of I look at this wick that just happened 4 or 5 hours ago down to like a little bit below 52 cents, and it kind of went into this area where these other wicks are going into, and that tells me that there is demand there, and there has been demand there. If price were to break below this area, I think you would see a lot of people and a lot of traders like sell, right? So when you get a lot of people that sell all at once, right? Like that creates a lot of volume of like buys and sells going through, and then that creates liquidity for like a big player. So I'm kind of seeing that this way this chart is developing. I'm seeing the way that we kind of have this 4 hour level, which was resistance, which we would assume our theory tells us would hold as support if you were to come down and retest it. And then I'm combining that with looking at, the way that price has wicked into this, little box here, 1, 2, 3, now 4 times. And what I'm seeing is that it's kind of creating this little gap here, right? Where let's change this color just to, let's make it yellow. Okay, so I'm seeing this little gap here, right? Like it basically tells me that if price goes below this box and breaks down, like price will probably just fall straight through to this next box. And when it does that, if it does that, like you would probably see a lot of volume and a lot of liquidations, and then you would see that liquidity that maybe like a big player is looking for to enter. So I'm personally watching, this little, just like, you have these wicks into here on, the hourly. You have this kind of gap here where like I would assume that if price were to break below here, it'd probably just gap straight down into our higher time frame support. And what that would accomplish is basically it would like a lot of people that own Doge right now would sell it to a big player, and that is, in my opinion, what is pretty much like going to happen. right now, like price is consolidating, and if you think about it, the longer that price consolidates, like the longer that price hangs out up here, the more positions that are going to be open, the more people are going to buy, and then that's going to, that means that the more positions that get open, the more positions will end up being closed, and the more volume and liquidity there will be. So what we can, you know, what we can say from this chart is that right now we have, if we go to a 4 hour, we have this kind of like higher time frame, what used to be resistance, uh, assuming that if price came down here, price would hit it and then hold and then go back up so that it would hold as support. We zoom into our hourly. We look at we have this resistance up here, and then we have this support here, which held on this recent pullback, even though it wicked down. The candle still closed up here. And then we have basically this like liquidity area where myself personally am assuming that there are probably a lot of stop losses that would get triggered if we were to break this area. And then that would, that combined with this kind of like gap would pretty much just send price down into our support area. So I'm looking for price to come below 40 cents for some buys personally, and then yeah, that's pretty much it. Now again, like we were saying, like whales kind of like manipulate charts, whatever. Just trying to like engineer liquidity so that they can like enter and exit positions at will. I wouldn't be necessarily surprised to see price actually pop up here, maybe to like 70 to like 75 cents, and then come back down into there. But also, I just wouldn't be surprised for if price were to kind of just travel down here as well. That's just what I'm looking at. I'm planning for price to come below 40 cents and to enter a position. And if if this doesn't happen, then you kind of have to adapt to the chart and just like play it as it goes along. That is just my plan. I'm looking for price to sweep below this liquidity zone into this high time frame support area, and then ultimately once we hit this, I do then expect price to eventually go up to $1 and beyond. That is just what I'm looking at. Again, I don't. Tough to know the timing on this stuff. We have the catalyst on the 8th, so I wouldn't be surprised to see some sideways and then maybe a little run up, come down there, and then after the catalyst happens, then maybe you see the dump into this area, followed by then the recovery. I don't know. Impossible to predict, but yeah, this is just kind of what traders kind of like. It's really just like you try to break down the chart, you try to understand it, and then you make a plan for the future, so that if something happens, you're ready to react to it. And then if it doesn't happen, you adapt your strategy. Right now, I am preparing to react for price to dump down to below 40 cents, which I will then buy. And then, yeah, we'll see what happens. If it doesn't and it keeps going, whatever, fine, cool. I'd be wrong, and I move on. But price coming down here is something that if it happened, I would feel confident enough to make a play on it. So yeah, long video. I might as well just upload this to YouTube. I was planning to upload it to Twitter, but whatever. Yeah. If you like the video, definitely like give it a like. like if you have questions, maybe like leave a comment and like ask a question, you know, if you want more or whatever. There's like a ton of people in the crypto community that like love to like teach, educate, help others. I try to do the same. Um, you know, like I'll help you guys out, whatever. So yeah, I guess that's it. Little tutorial, Doge, whatever. Yeah, Doge to the moon. Cheers.